If you don't find a way to make money while you sleep, you'll end up working your entire life. These lines come from Warren Buffett, one of the most successful investors of all time. Investing and compounding are the secrets behind his $134 billion net worth. So earning $12,000 a year or $1,000 a month shouldn't be the problem, right? Yes, if you know the answer to the number one question, how much do you need to invest in your goal? In this video, we'll talk about the best stock that can pay you $1,000 per month. But here's the twist. Since not everyone has the same risk tolerance, I'll be sharing 3 different stocks with different risk profiles so you can just pick one and start your journey of passive income with it. I will share the high-paying stocks, how much you need to invest, and how can you choose a stock, and prediction and analysis of each stock so can invest with confidence. In the end, I'll be sharing a list of 80 high-paying stocks with a bonus strategy so you can diversify your portfolio and maximize your gains. Before we move to stocks, there are a few things you might need to understand if you are new to the stock market. While choosing a stock, we need to determine certain things like dividend yield, which is the annual percentage of profit share relative to the stock price. Then you need to analyze if the company will be able to continue paying dividends or not. Payout ratio, dividend history, and company profile are the important factors to consider before choosing a stock. Some companies might be paying dividends on a monthly basis, but most companies pay dividends on a quarterly basis. So instead of getting $1,000 each month, you can expect $4,000 each quarter in such cases. The first stock on our list is Orchid Island's Capital ORC. This is a high-risk, high-dividend paying stock. The company belongs to the real estate investment trust sector, and it is based in the US. The company has issued 53 million stocks and has a market cap of $450 million with a share price of $8.5 per share. ORC has a dividend yield of 16.9%, which places it among the highest paying dividend yield companies. There will be high volatility for dividend cuts. Now, to earn $1,000 from ORC each month or $12,000 annually, need to calculate how much capital we need to invest. For that, we'll be using a simple formula by just dividing our annual goal by the annual yield. Since our goal is $12,000 a year with around 17% annual yield, we need to invest around $70,500 to earn $1,000 in monthly dividends. ORC started paying dividends in 2013. ORC's dividends are considered very unsafe. This rating indicates a higher likelihood of dividend reductions, which can impact your income stream. As shown in this chart, ORC has a history of fluctuating dividend payments. This reflects the instability that is associated with high-yield investments. This inconsistency can be a red flag for long-term investors seeking stable income. However, it's worth noting that the dividend yields have been consistently increasing for the past 2 years. According to the compound annual growth rate shown by Dividend.com, the company might show a decline in dividend payouts in 2024 and 2025. Now, coming to some technical indicators to discuss more about the risk factor that comes with a 17% annual dividend yield. The performance of Orchid Island Capital, ORC, has been declining. The stock price dropped from around $30 in early 2020 to $8.45 recently. If the stock price itself is going down, the dividend payouts don't matter. You are actually losing money as your assets value decreases. It's very important to consider both dividend income and potential capital loss. If you are getting good payouts and dividends and the stock price is going down, you are actually losing money. So overall, ORC is a high-paying stock that comes with huge risk. If you plan on investing in ORC, consider the red flags and invest cautiously. Next on our list is Devon Energy Corporation, DVN, which is a moderate risk stock that offers decent dividends. Devon Energy operates in the oil and gas sector, and it is based in the US. The company has issued about 632 million shares and has a market cap of approximately $30 billion with a share price of around $46. Devon Energy offers a dividend yield of 8.5%. Well, not as high as ORC. This yield provides a more stable income with less risk. To earn $1,000 monthly or $12,000 annually from DVN, you need to calculate the required investment using the same formula. With an 8.5% yield, we need to invest around $141,176.47 in DVN to achieve $1,000 in monthly dividends. That's almost double what was required for the previous stock to achieve this goal. As you can see on the screen, DVN has dividend yield has been consistently increasing since 2016. Therefore, the company has a CADI, consecutive annual dividend increase of 6 years. This is why Devon's dividends are considered safer compared to Orchid. The company has a solid track record of consistent dividend payments, and there's less chance of dividend cuts in the future. The company's financial wealth is good and shows steady revenue growth and strong cash flow. DVN has a good history of giving dividends, which makes it attractive for many investors. The growing dividend yield, stable cash flow, and profitability make the company even more attractive. Devon Energy's stock price shows fluctuations typical of the oil and gas sector. It peaked at around $78 in early 2022, but has since declined to $45.82. While the stock price has faced volatility, it shows more stability compared to high-risk stocks like Orchid. If we check the future prediction of the stock price, we can see promising indicators at play. According to TradingView.com, the stock price might increase as much as 55% and touch a high of $71. The stock price is estimated to reach a minimum of $48 and maintain an average price of $59. The capital gain of the stock is the additional profit you can get besides those consistent gains as dividends. If you want a mix of price volatility and high annual yield dividends, you might want to consider investing in the Devon Energy Corporation. However, if you still want to minimize the risk and want something safer, you can invest in Realty Income Corporation. The company operates in the real estate sector and focuses on generating dependable monthly income for its investors. The company is part of the S&P 500 and is based in the United States. Realty Income has issued 871 million shares and has a market cap of $46.3 billion. The of each share at the moment is around $53. Realty Income offers a dividend yield of 5.76%. I know this is a lot lower than the previous stocks we've discussed, but the reduced risk makes it more attractive for the investors who prefer safety over high gains. Now, how much do we need to invest in Realty Income Corp to earn a $1,000 monthly dividend or $4,000 each quarter? We'll be using the same old formula here. To earn $1,000 monthly or $12,000 annually from Realty Income, we need around $208,300 to achieve $1,000 in monthly dividends. That's a lot, but that's what you get with the minimum risk factor. The company has a strong track record of paying monthly dividends. The dividend has been increasing for years now. Realty Income has now earned the nickname the Monthly Dividend Company. It has CADI, consecutive annual dividend increase, of more than 10 years. According to the data by Dividend.com, the company is expected to grow its dividend over time. The dividend increased more than 3% last year, and in 2024, it is expected to increase with a compound annual growth rate of 2.34%, and in 2025, 0.81%. This means the company is not only promising consistent dividends, but also reflects consistent positive growth. Now, let's take a look at the stock price and performance as well, because we need to make sure the stock price over time to save our capital. Realty Income's stock price shows less volatility compared to higher risk stocks. It peaked around $70 and is currently trading at $53.15. The stability in its stock price makes it an attractive option for risk-averse investors. Now, coming to future forecast, according to TradingView.com, the stock price might increase to a high of $70, with a minimum estimate of $56 and an average of $60.03. The increase in stock price means additional profit besides the monthly dividends. Though the percentage of the dividend compared to the invested amount might look small to you, the gain in the stock price makes up for it most of the time. You might have heard the saying, never put your eggs into one basket. Though Realty Income is a safer option to invest, if there's a boom in some other sector, you might miss it. Also, only investing in one stock to earn $1,000 a month requires a lot of capital, more than $200,000 in the case of Realty Income, and exposes you to additional risk. Diversify to manage risk and increase gains. So, instead of choosing one, why not invest across all three stocks? This strategy mixes different market sectors and risk levels and diversifies your portfolio. The first stock required us to invest $70,000, the second required $141,000, and the last one required $208,000. The best practice is to invest 50% of your capital in the safest option and then divide the rest of the capital into the other volatile stocks. But let's keep it simple and invest equally in all these stocks. We need to invest $139,670 in these three stocks equally. Since Orchid is offering a 16.9% dividend yield, DVN is offering 8.5%, and Realty Income is offering a 5.76% dividend yield. The average dividend we have now is 10.39%. This means that you are investing less than what DVN requires you to invest for just an 8.5% dividend, and you are still getting more 10% dividend. With $139,670 invested with a 10.39% yield dividend, the annual dividend is $14,511. This means instead of earning just $1,000 a month, we have optimized the earnings to more than $1,200 a month while also minimizing the risk factor. Diversification isn't just limited to picking different stocks to invest in. It also means the diversification of the risk factor. Each stock should have a different risk profile. It also means diversification of the market sector. Each stock should belong to a different sector, so even if one sector goes down, it doesn't affect your portfolio. Last but not least, it also means the diversification of the distribution of the capital. Invest more in the safer projects and less in the high-risk profiles. Do you think it's wise to invest $139,000 in just 3 stocks? Or you would have added more stocks to your portfolio to further diversify it? Let me know in the comment section. That concludes our video. If you liked the video, consider subscribing to our channel and turn on the bell notification, as I will be back with more investment opportunities and similar videos. I will attach the list of 80 high dividend paying stocks in the description below. See you in another video.